Good afternoon. Thank you for joining us. I'm here with Matthew Hornor, who's the CEO of Maple Gold Mines, and Fred Speidel, who's the VP of Exploration. Maple Gold is listed on the TSX Venture Exchange under the ticker MGM and on the OTCQB with the ticker MGMLF. Matthew and Fred will be discussing last week's announcement of a strategic investment by Agnico Eagle of $6.2 million, along with a joint venture partnership on their Douay and Joutel assets in the ABITIBI region of Quebec. Before we begin the presentation, there are some details of the transaction, and I will caution that the presentation might contain some forward-looking statements, which will be available on the company's website. After the presentation, there will be a question and answer period. If you have any questions, you can input them into the Q&A box below. So congratulations, Matthew and Fred, on the transaction, and looking forward to going through the presentation with you.
Thank you, Tina, and thank you everybody for taking time out of your busy day to hear an update from the company, from myself, Matthew Hornor, and Dr. Fred Speidel, who's going to be going through the project level details with you. So it's an extremely exciting day for us here at Maple Gold. Obviously, we're on the brink of something truly important for not just the gold sector, but also for Quebec and Canada. We're embarking on a mission to drive an incredible shareholder value as we've always done. And now we've come to the point where we're really at the jumping off point to something really big. So today, I'd like to talk to you about what we have in store, what we've completed, and where we're going to next. The four main themes and things that we'll be addressing today are: what is Maple Gold Mines? For all of the new shareholders, I welcome you to the story. For all of you loyal shareholders, thank you for being supportive through some of the harder times, and there have been a few years of challenges, of course, in the market generally across the boards, and I'm happy that we've emerged now to the point where we are today. You know, for Maple Gold Mines, I think there are four main points that I'd like to address today. One is that we are a premier ABITIBI late-stage gold exploration company. For one, we have now established an incredibly strong and important partnership with, I believe, the best gold production company in the planet. It is also, therefore, one of the best in Canada, and definitely the smartest gold production mining company in Quebec, far and away the best. And gentlemen and ladies in the Agnico organization have truly been a pleasure to work with, and we see incredible collaboration and shared vision with their team, and I cannot say enough wonderful things about the whole team at Agnico Eagle. The third thing is we have not only a partnership, but now exceptional targets that rest in the shadow of giants all around us, and we'll talk about what that means, and Fred will go through some of the near-term targets that we are looking at and why we're so incredibly excited about those targets. And lastly, the last point to take away is that we are fully funded to execute on multiple strategic initiatives on the ground, in the exploration side, and corporately as well. So these are the 4 points that I'd like to go through with you all today. And after we're done speaking, we'll have some time for Q&A at the end. So what does a premier ABITIBI late-stage gold exploration company need? We have, I believe, an exceptional jurisdiction and location. Quebec, I believe, is the #1 gold district anywhere on the planet. If you're flying in from, say, outer space and you're a little green Martian flying in a spaceship, trying to find the best place to look for gold on planet Earth, it was a necessary component to your spaceship's operating system, you would choose Quebec among a handful of other areas as the #1 area to look for gold. So that's a great place to start. We're located, our project, in the heart of the prolific Abitibi Greenstone Belt, which has also been, I might add, a hotspot for M&A activity, which I'll touch on later. We have major highway power to the project, skilled labor everywhere with the townships of Amos and Matagami nearby. So what is unusual in the mining world is that you have a workforce that's able to come and commute to the mine site. Normally it's 6 weeks on, 6 weeks off. Some of the work I've did in the past at Ivanhoe Mines were such operating kind of shifts. It's nice to be able to drive to your workplace in a gold mine and then drive home to watch your child play hockey or engage in your after school activities. So that's a very, very important point, and creating a positive culture within our organization has always been something we're focused on. We also have an established gold resource today that we've been working on for a number of years. It is just under 2.8 million ounces in the inferred and indicated categories. We're virtually royalty free, and we're, as I said, adjacent to past producing high-grade mines. Our management team hails from Inmet Mining, where Fred Speidel comes from, as well as Ivanhoe Mines, where I worked for 12 years. My mandate at Ivanhoe Mines was to align with strategic partners and bring in strategic capital to help grow the projects at Ivanhoe Mines, which is what I did for Mr. Friedland over a number of years, culminating in a couple of keystone projects, namely the Platreef projects, where the Japanese consortium came in and put a $300 million investment into that. That really kickstarted the growth of that whole company, I believe. Our directors and advisors also from Ivanhoe, Wheaton Precious Metals, Gold Corp, and Placer Dome. I'll speak about them a little bit more in detail in a minute. And now we have also established long-term institutional shareholder support, namely with Agnico, but I need to mention also, maybe tied for first with my favorite shareholders are the group out of Quebec, the groups out of Quebec. The Caisse de Depot, Sidex, CMP, et cetera, have been just superb shareholders and wonderful supporters. And it's worth noting that the Case also was a part of the Canadian Malartic story from the beginning, I believe back to when they were first at $14 million market cap, and then finally traded at a just under $4 billion valuation when Yamana and Agnico went into that project. We have significant upside potential now that we've secured Agnico Eagle as our joint venture partner. We'll be pursuing additional avenues for growth. But really what this says is we no longer need to raise any capital, which puts us in a separate category of junior mining gold stories. To say that we have no need to raise additional capital, I think puts to rest or allows our shareholder base to be very calm in knowing that I believe our downside is significantly taken care of, and now we have extreme upside potential as we continue to grow. Our combined resource package now boasts 400 square kilometers. The resource that we've started to unwrap, just under 3 million ounces, is only on 4% of our territory, which I think is another point which of interest for ourselves and to our great partners at Agnico. So Quebec is where miners target new ounces. This is a very bold statement, but backed by the facts and history. 35% of gold produced in Canada was in this region. It's, again, the top mining jurisdiction, as I mentioned, I believe #1. I think the only other jurisdiction that would compare to it is a place called Orange, Australia, which is another unique location of the planet. But for Canadian purposes and the world purposes, I believe Quebec is one of my favorites. Incredible food, wonderful people, and mining credits, which I'll talk about in a second. Relatively low cost exploration. This Abitibi Greenstone Belt is produced more than 200 million ounces. And I think that's something that if you're taking notes today, it's something to keep in mind and run the numbers on what size of tax revenues and actual dollars produced that translates into. It's quite significant. The provincial governmental initiatives is to support the mining the sector through infrastructure development, through Plan Nord. It's also important. These things should not be missed. And we receive 30 cents back for every dollar of exploration spend in the ground, which doesn't happen in many other places. In fact, most places on the planet, including African nations and other foreign Asian and South American nations, just doesn't exist. This type of support for exploration work is unique to Canada, and is specifically unique to our friends in Quebec. So the world-class Abitibi Greenstone Belt, here's a note that shows some of our neighbors. And I'd just like to address a few of them, which we're very proud of our neighbors. We're very, very proud to be among them. Detour Lake is 15 million ounces, just under a gram. It's the largest Canadian gold mine in the first quarter. Last year, it produced 600,000 ounces. Canadian Malarctic, of course, is my favorite, and what we believe and we hope to ultimately become similar to, and maybe Fred can talk about that at the end of the call, how we're similar geologically and from a footprint standpoint. They have 12 million ounces, just under our grades, at 0.96, and the second largest Canadian gold mine in Canada. So we have the number 1 and number 2 largest gold mines in Canada. And as of the first quarter of this year, last year, they produced 669,000 ounces in that project. Casa Berardi, owned by Hecla Mining, here are the numbers for them. Last year, they produced 134,000 ounces. So we're exactly where you want to be. And as I mentioned before, that Martian is feeling pretty good about having selected Quebec as a place to go to first to look for gold and more gold production. As I mentioned earlier, M&A hotspot, $10 billion in gold transactions have happened in the last 7 years, including with Cisco, Probe, Lakeshore, Detour, Integra, Horizon, and this should not be forgotten with respect to our story as well. I'll mention this quickly to orient the audience as to where we're located in case you haven't looked at these maps yet. We have infrastructure everywhere. You can see the Douay project in the center now. Now we'll have to come up with a clever name for the Douay-Joutel project, which is now combined 2 projects, which we'll get into in a minute. We're 200 kilometers north of Val d'Or, so you can fly in. We'll have investor tours when the pandemic calms down a bit, allow people to come to site. It's very nice that you can drive to the project site in a Honda Civic or any form of motorized vehicle. You don't need a helicopter or anything of that nature. It's accessible via 2-lane provincial highway, adjacent to high voltage power lines, so there's no need to build infrastructure. There, we have 669 claims covering 357 square kilometers. This does not include the Joutel additional ground, and we hold 100% interest into most of those. There's a small royalty over a very small piece of our project, which is insignificant. The project covers also, which is important for the technical folks on the call, 55 kilometers, a segment of the Casa Berardi deformation zone, which has also been a highly prolific area for gold production. So, and as I mentioned earlier, the current resource covers only 4% of our total resource package, and IM Gold owns 1% NSR over a small other area, which I think amounts to about 100,000 ounces of the total, just under 3 million ounces. And if you're keeping notes, excuse me, when RPA did the resource estimate, they used $1,500 gold as the input to get to that number of ounces. Pardon me. So the exploration history, I'll just touch briefly on this. The very first time that there was a discovery made at this project was in 1976, when I was 5 years old, running around thinking about other things other than gold mining. It was in a $300 gold price environment, thereabouts, and it went through a number of hands until the current structure was able to acquire this incredible asset. And from the day I joined, which was just over 3.5 years ago, or around 3.5 years ago, we've been doing a lot of work to transform internally the software, I would say, of the company and bring it up to the standards of a large mining company. And I've always thought about this project and the company potential and the many dollars per share range, because that's been what I've been used to in the past in other companies. So this is how we've always been behaving, as if we're a much, much larger company, and which because we expect ultimately to get there. What we've done since I've been involved, as you see tangentially, is a transition from outsourcing our IP work, technical services, to bringing everything in-house. And these are the smaller, important components which are sometimes missed. Keeping the technical services and the knowledge base inside the company is incredibly important, because as you translate information and transfer information, flow information to different teams, you lose a lot in that translation. So having it all internally has been incredibly important to come up with what we did, a 3D geologic model for the first time ever. And Fred Speidel, again, I can't say enough wonderful things about him and his team. He's starting to really get, and he's got, I think, his hands around this project and what really it can deliver, and he has identified a number of pathfinders to find additional ounces. I mean, if you think about the drill program we just completed this year, 11 out of 14 holes hit higher than average grade of our project. I'll just pause to let that sink in. That's 11 over 14. That percentage of success and hit rate is exceptionally high. And that's only because Fred is an absolute spectacular gem of an exploration geologist. And I cannot say enough nice things about him and his incredible team. We've relogged the historical core. It bears mentioning that we have about $60 million of drilling done by us and past management teams that's sitting on the project site. As you can see there, it's kind of a treasure trove or library of data around the drill logs. And so instead of just going up and reading about what a drill log says or what somebody said about a specific drill log, Fred can walk out to the actual core and look at it and run technology around it to see what else they might have missed. This is exceptionally important for this project and targeting going forward. We established a new 45-person camp that's already been built that doesn't need to be paid for. And of course, we delivered a very conservative resource assessment with Roscoe Postel Associates, RPA, which is one of the best in the business. Our team, in addition to myself and my background, is that from Ivanhoe Mines and securing partnerships and helping raise capital for Robert Friedland and that team of exceptional management and board includes Greg Gore, who came from Deloitte's CFO, Fred Speidel, I mentioned a minute ago. He worked at Inmet First Quantum for about 26 years. He speaks 4 languages. He comes from Quebec. He started his exploration activities hunting for gold in Quebec. He also speaks German, Spanish, and his English is pretty fluent as well, as you'll hear in a minute. Jonas Lang is fantastic also. He spent years at Riverside Resources, and he's helping across the boards. And Shirley Anthony, we recently appointed to Director of Corporate Communications. You'll see more and more of our name and profile being raised through her efforts. Maurice Tagami is on our board. He is the VP for mining operations for Wheaton Precious Metals since 2012. He's an incredible human being. Gerald Riverin is a later addition, but used to work with Fred Speidel. He is also formerly with Inmet. And he's been involved in the discovery and development of notable properties in Quebec, including Troilus. Sean Charland should be credited with the one who originally found this idea a number of years ago and brought it to fore, and actually who invited me to join this company, and also an incredibly talented capital markets individual. On our strategic advisor list, we've had from the beginning somebody involved in this company and project, somebody by the name of David Broughton, who's really responsible for every ounce that Ivanhoe Mines boasts throughout its properties, not only in Platte Reef in South Africa, but in the DRC as well. He received the Lindsay Thayer Award for the Kamoa project and that discovery, and somebody with whom I worked actually at Platte Reef in South Africa, where he was similar to this situation. He was on the ground finding all the new ounces, and I was helping to secure the capital in that instance from Japan to let him do so. In this case, I'm helping Fred because I'm the support staff for Fred and the team on the ground, who are the most important individuals for this company and driving the value, the true value of this project forward. Egizio Bianchini, Timo Juristo, Matthew Lexier are recent additions as strategic advisors. Every single one of them are incredibly talented in their own spaces. Egizio Bianchini is probably one of the most famous mining bankers in Canada, if not across the globe. He was recently former vice chairman of Ivanhoe Mines, former vice chairman and co-head of BMO's Global Metals and Mining Group. Incredible track record of helping to finance and line up all sorts of great ideas for mining companies. Somebody with whom I've enjoyed a friendship for a long time. Back when I first started this job and he was still at BMO, he sung the praises of this project and its future back then, and I'm happy to welcome him as a part of this team and to be working with him. Timo Dristo spent many years with Goldcorp and Placer Dome. He's in Australia now and helps bring life to the story in that jurisdiction, as also an incredibly talented human being in the mining space, but specific to gold. Matthew Lexier is qualified in the capital raising. He's been part of many public and private offerings, and as a lawyer with extensive marketing and transaction documentation experience. So I'm very excited to have all of these team members with us as we continue to build our team and grow our culture here at Maple Gold. So now we can talk about the wonderful combination that we just announced recently, which I'm delighted the market is also seeing as a positive move for us. You know, I gave away over the last couple of years publicly the fact that we were working on doing something just like this, and what this project has always needed, which something that I've always said is we need a partner to help us bring this forward, and now we've done that. So I'll go into what this partnership includes, and again at the end, if there are any questions, I'd be happy to address them. On October 8th, which is an auspicious day in the Chinese calendar, we announced the formation of a binding term sheet, or a partnership through binding term sheet, a 50-50 joint venture with Agnico Eagle. This included a strategic investment which closed yesterday at 24 cents per unit, which brought their ownership to 12.8%. They had purchased 4.4% in our financing we did in August, which we kept quiet. That was at a significant premium. I believe it was almost a 50% premium at the time we announced the deal. They have the ability to buy additional piece of the company at 34-cent warrant strike price within 3 years, and we can accelerate that after 2 years. Another important point is they've contributed the Jutel project, which we think has an incredible potential. This hosted a past producing Tellbell mine, which was a 1.2 million ounce producer at about 6.5 grams. The geology runs from that project onto our ground, so the synergies were just obvious to both teams. Agnico's also committed to fund solely $18 million in exploration over a 4-year term. This is more of a minimum versus maximum spend, just to ensure that the project gets moved forward in a reasonable fashion. We're also going to jointly fund some VMS targeting on the western portion of the Douay project. And you should look up Agnico's Laurent project to understand why that is a good idea. Because I think that although we're focused on the gold story, there could be some incredible VMS potential as well. For contributing both projects to the joint venture, both Maple and Agnico will be granted a 2% NSR upfront with a $40 million buyback. And as co-managers of this project and this joint venture, we're getting access to their technical expertise. Agnico Eagle has essentially a miniature mining or engineering firm within its company. I think Jean Robitaille, who's somebody with whom we worked extensively over the last few months. And I should just mention that the Agnico relationship has been developing over 2 years. This is not something that just came out about over the last 2 months. The level of diligence they did on our project was, shall I say, extensive. I think only paralleled by the work that the Japanese often do. Going to site many times, living in our data room, and going back and forth with us over 18 to 24 months. It's been a long time getting to this point. But we get access to their technical expertise through their joint operatorship of the joint venture, which we're extremely excited about. And another thing to mention is down the road, once we get to the point where I believe we will get when we start the development of these joint venture projects, Agnico has agreed to support us in our pursuit of third-party project financing at the development phase. So this is what the consolidated property package looks like. You can see the contribution by Agnico Eagle is located in a slightly different colored yellow sector at the bottom. It now is about 400 square kilometers, and we have what we think to be an incredible opportunity in this area to grow a district scale gold story. You know, many people didn't think the Canadian Malartic restart made any sense back when they first started, and we think that Joutel and this combination represent, we think, similar upside potential. So just a few words on the Joutel project background. This is 39 square kilometers just south of us, as you saw from the map I just brought up. Following the discovery of the Joutel copper, zinc, and VMS deposits, they began exploration in 1962 in the nearby Eagle Telbel area. And it bears mentioning also that, you know, this company, Agnico Eagle, began, as every company begins, with an incredible project. And this is the project that started Agnico Eagle. So they're contributing their namesake project to this joint venture, which is incredibly important point to remember. The first gold intercepts were obtained between 62 and 64 as a result of testing some coincident mag and EM anomalies. This project hosted significant past production, as I mentioned earlier, 1.15 million ounces at 0.65 grams. They stopped and closed the mine when gold was at $360. I think that it should be noted that at that time, the cutoffs would have been significantly higher than used today in order for that mine to be profitable at $360 per ounce. So I'll leave it to the audience's imagination as to what we think that project can become and is. There is significant historical data available to guide our further exploration. The compilation of data is underway to digitize everything. And the very second we have that available, we'll make it known to all of our shareholders and to the market. So stay tuned for that. So the joint venture funding, just to go into some of the details here, is that Agnico will fund $18 million over 4 years. It goes 4, 8, 13, and 18. And as I said, they're helping us with third-party project financing. For a smaller company like us, relative to them, that's very important. And when we look at future cash call scenarios, so that we're not cash called into oblivion, which may happen. It may happen if there's a David and Goliath setup. We have technical expertise through the joint operatorship, as I mentioned before, and I think Fred will echo what I'm about to say. The collaborative nature and the shared vision between the two teams, we saw live on many Zoom calls. The shared vision is really incredible and has all of our tails wagging quite a bit as we see what else is there. And things that we saw at our project and things they saw at our project just made us more and more excited about what the Douay project and Joutel projects will become. So what is the impact for the Maple Gold shareholders? Well, I think the most important impact is that it's a validation. It's an endorsement by the group, the company that knows more than anyone about how to find and produce and to build gold mines in Quebec as the second or first largest producer of gold in Canada. There's asset diversification that comes with this. With these two projects in the same joint venture, we have a past producer that could be reinvigorated, and all the exploration upside we have on both, and including the Douay projects. Again, we have enhanced exploration expertise. Their team is exceptional and second to none. I think Fred, though, holds his own with them, and they have a wonderful, wonderful combination of talents there. And the investment percentages, the premiums they paid were very attractive, so the market could see that they were interested in not only the project, but the company itself. So you're in good standing next to them, owning shares next to Agnico Eagle, given what they paid for their shares and what they expect to pay for their warrants to bring them up to 19.9. It's important that they have a standstill where they can't buy more than 19.9 of our company unless we let them out of that, or unless we receive interest from an interloper. They would be relieved from that, of course, as well, which is normal commercial standard terms. So I think now we're extremely well positioned with financial flexibility to not only advance Douay Joutel, but also pursue other growth opportunities in Canada to really create a properly important and relevant gold story. A Maple Gold Mines is an incredibly, the upside is there. I credit my wife and daughter Eden for helping us rebrand the name, but Maple Gold really tells the Canadian gold story, I think, like no other, and the upside is ahead of us. I'd like to let Fred Speidel jump in now and talk about the third point, and that is the targets that we're looking at going forward, what this drill program has in store for us in the next few weeks, and why we're so excited about that. And this program and the following program next year, I think he'll touch upon also some of the exciting results we had from the program we ran earlier this year. So over to you, Fred.
Yeah, okay, so basically here what we're showing is the configuration of the resource area as defined by Roscoe Postal on the little figure on the right-hand side. So we see in gray basically the ultimate conceptual pits as defined by RPA, within which we have the resource the base case that we disclose. And so in blue, we have the inferred, and in green, we have the indicated. And you can see that most of the green comes from Douay West that has a lot more work done to it in the past. But there's also a couple of areas within the porphyry zone that have indicated resources. So in terms of numbers, pit-constrained mineral resources in the indicated category, we have 422,000 ounces at 1.52 grams per ton, pretty good grade. Most of that comes from Douay West. Inferred resource is just over 2 million ounces, 0.97 grams per ton gold. You'll recall that that's pretty close to the average grade of Detour as well as Malartic, as Matthew indicated previously. And for the first time, we have an initial inferred underground resource that extends over the entire length of the deposit of something like 300,000 ounces at an average grade of 1.75. Keeping in mind that there's very little drilling that has been done at Douay below about 400 meters vertically. So this is really just an indication of what might be there. And so the total mineral resources, 422 plus 2.35 million ounces overall, including both underground and open pit. Next slide, please. And so we, in the upper figure, we see a section through the western part of porphyry zone. So you can see that there's a yellow, the yellow ellipse there. That's highlightation between the existing hole is greater than 50 meters, and therefore, even though mineralization is quite continuous from surface down to the base of pit, it could not be included in the indicated category because of this the greater than 50 meter spacing. But you can really see that as the drill hole spacing is being reduced to less than 50 meters, that we will expect the indicated resources to essentially extend from top of bedrock right down to base of pit. Another thing I want to mention here is you can see the pit outline in brown here. that the northern boundary, that is to your right, the northern boundary is not fully defined, and that's part of the reason for the drilling that we did in 2020. So note, for instance, the intercept of 1.9 grams per ton gold over 17 meters right below the base of pit, and that same hole actually ends in mineralization at 1.1 grams per ton gold, so that hole needs to be deepened. Also supporting the concept that the northern boundary of this pit is not fully defined is the hole that shows 1.17 grams per ton gold over 163.5 meters. That's a historical hole, probably one of the longest continuous intercepts of gold mineralization on the property, mostly hosted in intrusive rocks. And again, you can see that mineralization there extends well beyond the base of the pit. So basically that entire northern flank of the pit does require more drilling, and we will be pursuing that in winter 2021. So that's for the porphyry zone. Some of the highlights there are given in the text. I won't go through them in detail. The other area that's of interest is the northwest zone. Just previous slide, please. Where we can see that what we were chasing was the historical intercept of 3.15 grams per ton gold over 8.9 meters. And we ended up getting 4.16 over 3.4. That's the gold colored boxes, followed by 20 meters of 1.15. You can see that we did confirm mineralization, like near surface mineralization, basically from base of overburden onward. There's a 200-meter drilling gap to the west, and then there's a 150-meter drilling gap from the historical hole that we were talking about. And these rocks here is very different in the sense that it's largely sediment hosted, and we can see that in the next slide. So basically the northwest zone I was just talking about, we were testing the northwest corner there where there's a bit of red color. And essentially we have a contact that runs all along the northern flank of the deposit. So that takes in the northwest zone, the central zone, the main zone. And that contact marks the boundary between older basalts to the south and sediments to the north. There's about 25 million year age difference between those two rock types. So not only are we talking about a change in lithology, but we're also talking about a major shear zone running through there. You can see all these brown ellipses. They basically mark the intervals along this or to the north of that major shear zone where we have no drilling at all. And see the scale, 400 meters. Most of those ellipses are greater than 400 meters. Another point of interest is that the central zone has probably the best result anywhere on the property in terms of top of bedrock drilling, where you go through the overburden, go a few meters into the bedrock, do geochemical analysis of both sample media. And so here at the central zone, we got one of the holes got 266 gold grains in till, and they're relatively fine gold grains. So that means that the source has to be more or less 500 meters to the northwest. That's that second large brown ellipse. So basically the source area for this gold in the top of bedrock drilling has no drilling. So that entire area is of interest. And we have, of course, a series of other targets in between the different mineralized zones where there is insufficient drilling or where we have high-grade zones that appear to still be open. Just as an example, the Agnico zone that's partly hidden by the label here, this is new, did not exist as part of the resource, is a result of a discovery that made in 2018 based on the presence precisely of some of those high-grade zones that weren't adequately followed up. In 2019, we took a similar approach to the 531 zone. You'll note that the southern part of the 531 zone, previous slide please, is also red meaning greater than 2 grams per ton. So we drilled a couple of holes there and got some outstanding results, better than discovery holes for that particular area. So there's a number of those areas that we are continuing to pursue within the resource area. And of course, there's all these targets on the margin of the resource area. Next slide. So this is just to give you an impression of what the property looks like as a whole. Matthew's already mentioned that before. It's 400 square kilometers. The resource area is around 10, more or less, square kilometers. So you can see that labeled do a resource. So you see the hatch pattern. That's the RPA 2019 conceptual pits. The pink is the cyanitic intrusive complex. And so what we've done is taken a bit of a step back and looked at what was around us and what other styles of mineralization we could potentially find on the property. So that led to doing an IP survey to the east of the resource area. And that helped us allowed us to define the northeast IP target and the south IP target. The south IP target does have a number of historical drill holes in it. There's some intercepts greater than 1 gram per ton. No tremendous widths. It's not by any means fully drilled off, but we elected to focus on the northeast IP target because that's roughly 3 kilometers long, has a single historical hole at its southwest end. We'll go into a bit more detail on that in a moment. Note again the major lithotectonic boundary that I was talking about. So SADS to the north, they're kind of an orangey color, and mafic volcanics to the south in this green color. So that's important in the sense that it allowed the emplacement of the whole Douay intrusive complex and the associated gold mineralization. Other point important to mention is the position of the Eagle Bell deposits, past producers, as already mentioned. You see that sits on a major deformation zone, one segment of which heads over to the east and then heads back up to the northeast onto the Douay property. And in this area, what we call the Joutel Deformation Zone East target, there is no historical drilling whatsoever. The Joutel Deformation Zone West target that's on the Joutel property that Agnico Eagle is contributing has a number of drill holes with some quite promising results. Again, apparently several styles of gold mineralization there. And so there's additional work to be done there, which will probably include geophysics to better define or better map the distribution of sulfides followed by drilling. At the Eagle Bell deposits themselves, basically no exploration work was done below about 1,300 meters. And so that means that the down plunge continuation of the deposit is entirely open. No drilling was done there. And just for reference, in places like Malartic, for instance, mineralization exists and is considered for exploitation down to about 1,900 meters depth. So in the ABITIBI, the vertical continuity of the system is very extensive. And a lot in a number of examples, including Goldex, for instance, that historical mining was done relatively near surface, but future drilling subsequently clearly demonstrated the continuity and economic validity, if you wish, of resources below that level. So we're looking forward to testing all of these targets. What I've highlighted here in red are some of the segments of these deformation zones that are deemed to be quite significant. Matthew mentioned the copper zinc targets. Previous slide, please. The copper zinc targets that are shown in black. So that covers a fairly large portion of the property, and we'll be most likely flying an airborne survey over that to further define the targets that were outlined from 2018 mapping and sampling. The extreme western part of the property, we have these gold targets. They're basically spatially associated with the continuation, the interpreted continuation of gold ridge VMS targets. And so they also need to be tested with geophysics and additional drilling. So lots of targets, both within the Douay and adjacent to the Douay resource area. We just completed, just as an aside, we just completed a geophysical survey there, several of them actually. So what we're showing here is the northeast IP target, which is now drill ready. We expect to start drilling there later this month. And just in terms of the detail and the figure on the lower left in plan view, we're showing the position of this lone historical hole at the southwest end of these chargeability anomalies that I talked about. Well, that historical hole was pretty shallow, only drilled to 150 meters depth, yet it did intersect the right kind of rocks, that is silicified sediments with gold mineralization top to bottom in that hole. So that's very significant in the sense that it's basically confirmation of the VESA model that we're using for this sector. So we're not just drilling a big geophysical blob, we're actually drilling a geophysical blob with geochemical and geological support. So that's important. And so basically, yeah, we have 3 permits there, and we'll be drilling a couple holes. We actually just submitted for a further 3 or 4 permits to the northeast of where we're showing the proposed hole here, because we did some follow-up IP, which gave us some pretty promising results. So important point in the section here, again, to show the shortness of the projected historical hole. That's only 150 meters long. So not only is it on the southwestern edge of the IP anomaly, but it actually didn't really test the guts of it. So we're going to drill a deeper hole to go right down to the core. The vertical interval that we're showing here on this inverted section is about 450 meters. And just by analogy, VESA, which is the deposit model that we're using, extended down to at least 750 meters depth. You can clearly see here that the chargeability anomaly at 450 meters depth is still quite wide open. So that's a very promising target that we're very much looking forward to drill soon. Next slide, please. Yeah, so in terms of our plans, we're going to be quite busy with this this new joint venture. And so basically, what we're going to be doing in the last quarter of 2020, we already have received the results of an artificial intelligence study. We're assessing and evaluating that. I just received the report for the IP results that look quite promising. we have a 3,000 meter drill campaign that's starting in the next couple of weeks, end of October. The contract is in place. And basically those 3,000 meters will be concentrating on the sort of eastern half of the resource area, but not within the conceptual pits, mostly on exploration targets that have been defined in the meantime through geophysics and other methods in terms of attempting to expand our resource base. Historical drill data, as you tell, is being digitized as we speak. And we actually have a meeting just after this call to discuss drill targets for the winter 2021 drill program. So things are moving ahead full steam. First half of 2021, we will be doing additional IP programs to basically map the distribution of sulfides along the favorable structures that we've identified previously. So that's those red bars along the deformation zones. About 10,000 meters winter drill campaign, and that's going to include a variety of targets, step-out drilling along the north and south flanks of the current resource area, a number of exploration holes further afield, as well as a limited number of infill drill holes inside the resource area. And as mentioned before, airborne geophysics to cover the western half of the property where we currently don't have detailed geophysics in terms of being able to better focus in terms of where the best copper zinc potential is. Second half of 2021, obviously the 3D model is being updated on a continuous basis in real time because we don't do that externally. That's all done internally now. Resource optimization, and then depending on the results of the winter drill programs, we may elect to publish an updated resource estimation. And of course, we'll follow up on the highest priority target areas that will have been defined during this program. So here's just quickly to show you the distribution of the proposed drilling. So the red dots are the fall exploration drill target areas. You can see that a couple of them are within the resource area, but they're mostly on the margins. And so they're testing exploration concepts. And then the blue outlines, they show the distribution of higher than deposit average grade near surface mineralization. So winter drilling is not going to be restricted to those areas, but it will include those areas because obviously it's of interest to us to get a better handle on what the near surface higher grade mineralization is from a starter pit search space point of view. And you can also see where fall exploration drill target areas labeled to the west of that. We actually just completed a geophysical survey there. Note the magnetic pattern, which is the colored base map that you're seeing here, quite similar to the magnetic pattern within the Douay resource area itself. And the geophysical survey that we just completed there gave some quite positive results, so that'll justify drilling a number of holes in that area. So we're looking forward to not only continuing to advance the resource forward, but also to test all of these multiple exploration targets that we have throughout the resource area, near the resource area, and on the greater property to add to the resource base.
Thank you, Fred, for that. And if there are questions at the end for Fred, please feel free to answer or ask those of him. So now I believe the last point to be remembered is that we're fully funded to execute on all these strategic initiatives on the ground and elsewhere. And I'll go through what that looks like. We have today $12.6 million in the treasury and another $18 million committed in the ground. So that puts us in a north of $30 million capital position for the company, which given where we were a couple weeks ago, it's a massive transformation for the company and our platform to do bigger and important things in the gold space. You can see a list of our long-term shareholders and the most recent very important shareholder of Agnico Eagle at 12.8%. The Caisse de Depot and the other Montreal group funds have been fantastic. Power One's out of Toronto. Stevens Investment Management Group is also a big owner, as well as Goodman Investment Council. So finally, and this is before we just sign off here, 4 things to be remembered. We are partnered with a world-class gold miner now. We have target resource expansion and newer high-grade gold discoveries with our new partner. We plan to leverage our balance sheet and evaluate potential portfolio additions for further discovery exposure. Of course, And I believe now we are in a great position to raise our corporate profile and attract more institutional investors and analysts to cover Urge going forward. So look for a number of catalysts in the near, mid, and long term that I think will continuously drive shareholder value, which is what I get up every morning thinking about. So that is our presentation. I believe that there's some time now for questions, if there are any.
So yeah, thanks Matthew and Fred, appreciate it, and congratulations again on this deal. As a reminder, if you have any questions, you can enter them into the Q&A box below, or you can email me at tina@. First, maybe we should start with a bit of a history about the deposit. Can you talk about how this project why this project hadn't been advanced during the last boom, and how it's seemingly come from nowhere? I know there's been a management turnover, but maybe you can address that.
Fred?
Yeah, sure. I wouldn't say that it hasn't so much that it hasn't advanced, rather that the concepts have been evolving. So basically, Orvista entered into the picture at the end of 2010, and from 2011 onwards started to do additional drilling. We have to keep in mind that while the original deposit, which is the main zone, which is actually a fairly small portion of the deposit now, was discovered in 1976. The bulk mineable portion of the deposit was only really discovered in 2004, 2005, and defined through additional drilling subsequently. So basically, when we entered, there'd been a fairly large drill program starting at the end of 2016, going into 2017 of something like 22,000 meters. Essentially, the concept had evolved from a number of higher grade, smaller deposits that people were looking at from underground mining perspective, and hence the head frame on the Douay West deposit, to thinking more about, well, no, this is probably more likely to be a bulk mineable system. We better look at it more from an open pit perspective. So focus your exploration on near surface, like, top 500 meters kind of drilling. So the focus had changed in the meantime a little bit. And so there've been, like for resource estimation 2017 was still a series of separated pits. 2018 version was a super pit version. 2019 with RPA was a kind of I'm going to say something in between, more conservative approach. And we're now looking at an additional approach, which is very much focused on adding significantly to the deposit size through exploration success. So really, the number of concepts, ideas, and exploration targets that we now have is very much broader than was the case back in 2017. So I view it more as a gradual evolution. So really, you can't necessarily advance a deposit that's still at the advanced exploration stage by throwing a lot of money at it. Like, it does take a certain amount of time. Money, of course, always helps, but you do need thinking time to evolve the concepts, and I think that's what we've done, and I think we're in a position to capitalize on that now.
And how complicated is the geology relative to some of the other Abitibi deposits?
Interesting question. I would argue that world-class deposits tend to be characterized by complexity, in the sense that you have to have multiple events happening to truly form a world-class deposit. And certainly the scale of the deposit at Douay is in that range, like 6 by 2 kilometers is significant. So I think it's not simple in the sense that we're not just chasing a couple of veins over a distance of a few kilometers, and that's our resource. So what we're looking at is the emplacement of an intrusive complex in a structurally favorable environment. The structures are deep, and we know that they were, tapping the mantle because of the presence of carbonatite. So it's complex in a sense of multiple geological events to unravel, but I think that's a favorable element. Like, people might ask, well, how does that affect our ability to understand it? And people talk about things like continuity. And really, continuity is a matter of understanding what exactly the controls are. So for instance, if you're trying if you're drawing north-south sections, and you're trying to interpret all the mineralization to be east-west, it's a bit more complicated than that. So you may perceive that the deposit is discontinuous, but once you've identified what the controls actually are, you end up realizing, well, no, the configuration of the individual mineralized zones is not necessarily linear. It can be sigmoidal. And another factor, of course, when you look at the distribution of the blocks and the wireframes and so on, Some of the apparent discontinuity has to do with the fact of, RPA, for instance, being rather conservative in terms of how far they'll project from the end of the last hole. So they'll project no more than 50 meters if it's a relatively broad intercept, but they'll only project 25 meters if the intercept is relatively narrow. So while there's good geological evidence to, interpret a much greater continuity from a conservative resource estimation point of view, these mineralized zones are stopped, and then the potential beyond that is basically considered as potential resource, but it's not something you can put out in a press release, but it is something that we work with in terms of upgrading the category from potential to inferred, from inferred to indicated, and so on.
In terms of the underground resource, there's an inferred resource of just over 300,000 ounces at an average grade of 1.75 grams per ton. Can you talk about the economics of that and comment on what the economics will look like or your expectations for that?
Yeah, for sure. So basically this was done at a cutoff of 1 gram per ton. And while there are examples in the ABITIBI of such cutoffs, notably at GoldX, we have to be realistic and realize that while in that situation, the infrastructure is paid for. So we're not stating by using those kinds of numbers that we believe that an underground mine with a cutoff of 1 gram per ton is likely to be viable. This is a first pass, an initial estimate. And basically, when you do an early stage inferred resource estimate, you will use cutoffs that are lower. You will use average grades that are lower than what you expect in the mining environment. So basically, our expectation is as there's more deep drilling done. Remember that there's very little drilling below about 400 meters vertical. As more deep drilling is done and there's more information, and as we move more towards indicated resources, we do in fact expect to increase the cutoff and thereby also increasing the average grade. Like we would expect that a potentially mineable resource for the future, assuming similar gold prices and similar other similar conditions, operating costs and so on, that the underground average gold grade will have to be north of 2 grams per ton.
So, and Fred, it's also worth mentioning where Canadian Malartic sits and the depth of its mineralization and what those grades are. So we're right in line with what we expect. What they're dealing with over there.
That's correct.
Well, and that kind of segues nicely into a comparison that one of the audiences was asking about, mentioning likening blueberry muffins with jewelry boxes as the blueberries on the deposit, and they commented that the Canadian Malartic was also portrayed in the same way. The question is, have you found these blueberries?
Yeah, I like that. That's kind of cool. So basically, if you look at the distribution of grades, like when I first joined the project, it was like, okay, the average grade is 1 gram per ton. Where can I go for higher grade material? Due West is higher grade. Is that the only area that has higher grade? But when you look at the actual distribution of grades within the entire deposit, you find these blueberries are basically present in each one of the zones. So one of the tasks that we have as geologists is to understand what controls the distribution of these blueberries and go for more of them. So for instance, just imagine that you have a tabular body, like kind of imagine a book. And so that's your grade envelope. But within this book, you can have several cigars. And so that's when we talk about the plunge of ore shoots, those are zones of higher grade within the book, if you wish, of mineralization. And those shoots tend to be controlled by things like structures. So we have several sets of structures on the property, and they do generate those kinds of shoots. And for sure, there are areas where we have these plums with higher grade, and they're in part structurally controlled, in part controlled by lithological variations. Like the different rock types have different physical and chemical characteristics. So, some rock types are more favorable than others. So it really depends on how these rock types are distributed. So I think it's a fair analogy that, yeah, you do have zones of definitely higher grade. And then when you talk about startup, it's typically what people do to recover their initial investment. To get the banks to pitch in, you need to have a payback that's 3 or 4 years or less. As people hopefully are able to start mining higher than deposit average grades near surface, and hence those blue lines that we were showing you before in the western half of the deposit, if you wish, where we have those kinds of higher grades. So yeah.
And Matthew mentioned some potential portfolio additions. I know you have a nice looking balance sheet right now. Will those additions be located in Quebec, or are you looking elsewhere?
We're looking at the most accretive possible portfolio additions that we can find. And everything we've done, as I think that the audience is aware of, is maybe it's taking a little bit longer, but everything was done is with discipline and with a clear strategy in mind. So what I can say in answer to that question is it'll be a smart move. It'll be something that makes sense. Like this transaction, we believe strongly makes a lot of sense. And the best place to start is by consolidation in and around our area now. So that's something that should be looked, it's coming soon to a theater near you, as one person once said.
Maybe taking a step back for a moment, you mentioned that Agnico has been looking at the asset for 2 years, doing due diligence, made this initial investment in August. Is there something in particular that prompted Agnico to get involved at this point in time?
I cannot speak for them. I can say that we have been in conversations with a number of parties. Obviously, Agnico is one of them, but others in that same echelon. And I think one of the things that I can point to is another achievement of Fred and the team is that in February, back when people were not sure what the pandemic was going to cause people to do or not do, we had funding in place to run our drill program. And although some of the audience or some people that I know were wondering what we were thinking going forward with the drill program, we said, the only thing that we can do every day to drive value is drill and figure out where this the geology sits and expand the resource and have discoveries. So we went about putting that money into the ground at a time when some people thought we were a bit nuts. So that, everything in life is on the margins, and I think this is no different. Fred was incredibly successful, as he always has been, and hitting 11 out of 14 holes. And so that when everyone came back out of their hiding from the March, April downturn of the pandemic, when there's a big shock to the market, we were able to bring out these incredible results from this last year's drill program and show everybody, including Agnico and others, what we had. Perhaps if we had not done that and we not had those successes at the project level over the last few months of the year, maybe that would have not had them move as quickly as they had. But I can say we had a number of interested parties and in receipt of offers that I didn't think were in the best interest of the shareholders. And what I can commit to everybody here is that I will always lead this company in a way that's in the best interest of all shareholders to drive incredible shareholder value, and which is what we continue to do. And I think that what caused them to move when they did, a number of factors, maybe the gold price moving up, our share price is moving up, them wanting to invest here versus down the road, et cetera, et cetera. But sometimes this, timing is just, you get lucky and the timing works across the board. So I think it was a combination of things.
And what do you think they saw in Maple's assets that they wanted this partnership rather than pursuing the development of Joutel on its own?
Again, I cannot speak for them specifically, and I maintain confidentiality about a number of things that they've done, including the investment in August. But what I can say with a big smile on my face is the synergies between these two projects, I cannot state enough. And when we're able to reveal what those synergies are, I think everyone will be very happy with this combination. So I think that I'm not going offside by saying in their mind, what they thought was the benefits primarily was the fact that the geology is very similar, and connecting the two makes a hell of a lot more sense than driving it alone. So 1 and 1 equals 58 versus 2 is kind of the way I think about this.
And based on the presentation, it doesn't seem like the drill program has changed significantly since signing this deal. Would you expect that program to change, and would you still be targeting kind of Q2, Q3 next year for a resource update?
I think that Fred may add a few things to add here, but this fall, before we sign the definitive documentation with Agnico, which will happen within 90 days, we've already started that work. we're pursuing what we're planning to pursue. Next year, our drill targets are 100 meters away from the resource and in the resource and go beyond that. So there may be some instances where the drill targeting changes a bit. Again, I think Fred would agree that he's delighted to have additional brain power in the brain trust coming from Agnico, and some of their ideas are truly phenomenal. I mean, absolutely, you can probably see the excitement on both of our faces. Like, it's a pleasure to work with them. So some things will change a bit around the edges as we drive the projects forward. As you tell, the digitization will be what's required next for us to complete some of the drill targeting there. Fred Speidel is the general manager of this joint venture. So, we are our own company. Maple Gold will continue to drive and become its own relevant large gold company in Canada, we believe. And nothing about that has changed.
And in terms of the drilling that you've done so far this year, there were some questions just kind of asking to clarify the impact of the drill results. I know that the results from this year have been higher grade than the resource, so maybe you can just comment and summarize that quickly.
I'll go back to the slide that shows the drill results that came out of the pit, and maybe that's a good place for Fred to focus that discussion for a minute.
Yeah, so I think actually there are two areas that had the largest impact in terms of results this year. So as I mentioned, this is the western part of the porphyry zone, where we knew previously that there's some really good intercepts from the past. And basically what we're trying to do there is define the northern limit, and we have not. We need more drilling. We've basically shown that mineralization continues to the north. And so that was important, not only because of near surface higher than deposit average grades, but also because we're demonstrating the continuity of mineralization in this area from basically top to bottom. And the other interesting thing is this is the area where we've just started a master's thesis on, and we see that there's some interesting complexities in that, to say the little green bar on the right-hand side there, that's actually not, no, on the figure up above, yeah, that's actually, yes, that's correct. That's actually not basalt, but it's actually sediment. So what we're seeing there is a contact between the Taibbi group sediments to the north and the actual syenite. So that's the major lithotectonic boundary I was talking about, with the much younger, the sediments to the north are about 25 million years younger than the basalts to the south. That's a major boundary, and is probably one of the reasons why we have such a nice concentration of mineralization in that area. And then similarly, the northwest zone, which is an area that had not been drilled by the company for some time. Most of the drilling there was done back in the 1990s. Basically, we were just testing the near surface higher grade mineralization there. And what we're thinking of, this is not a concept that had been outlined previously, is the possibility of a starter pit search space there. And so the results are quite interesting. And therefore, we have something like 10 or so sites proposed to follow up here. And we don't need deep holes. So you note the scale in the lower figure, 50 meters. We do holes that are maybe 150, 200 meters deep, and do half a dozen or so holes in that area. And that'll give us a pretty good idea what's happening in that particular area. And just, with regard to the Agnico Eagle partnership, basically, we've defined a series of something like 120 sites. We've ranked them, prioritized them, justified them. We're going to discuss those with them. They may have slightly different priorities and rankings, and in the end, we'll end up with, the best series of targets that we both agree make sense drilling in this winter's campaign. So I think I could say that in all of the campaigns that I've been involved with so far since joining the company, 2018, for instance, we discovered the new Nika zone. 2019, we had some significant successes in the 531 zone that also had not been drilled since the 1990s. And this year, basically, the successes were in the porphyry zone and in the northwest zone. So, there remains a number of other areas, for instance, central zone and main zone, that we haven't done any drilling recently. And again, that's all along that major lithotectonic boundary that we've been talking about, with drilling gaps of up to 500, 700, 800 meters. So those areas have come back on the map. As we get new results, we update our model, and the same sort of thing is happening on the south side of the deposit. I just relogged a couple holes recently following some very good geophysical results, and the mineralization in those two holes that are reviewed, again, is somewhat different from what we have elsewhere on the property. That's significant in terms of the implications that may have for targeting elsewhere.
We're certainly not short on exploration opportunities. So we're coming past the hour now. We have one more question, and then I'll let you guys wrap it up. Assuming all goes well, what kind of time frame do you see turning this into a mine?
That's a very good question. I think I would answer that with it kind of depends on how many drills you end up throwing at it. So basically, we still have to go through the PEA stage, the pre-feasibility stage, feasibility stage before we can get to construction. So, yeah, it depends. At this point in time, we're drilling with anywhere from 2 to 8 drills. If you're in a real big hurry, then you might do an Osisko and throw 28 drills at the project. So, you can reduce the timeline to production by doing that. But I think at this stage for us, it's advanced exploration, but we're still a largely inferred resource. And so we're still testing a whole slew of exploration targets that, of discovery targets that, if successful, can have a significant impact on how we view the project and what the project economics may end up being. So we have to do that before we go full steam ahead on definition drilling and throwing 28 drills at the project.
As soon as possible is another way of putting it.
Well, it's definitely an exciting time for Maple. Matthew, I'll let you have the last words. Maybe you can summarize some of the key takeaways from the presentation, and congratulations.
Thank you very much, Tina, and thank you for setting this up for us today. I think this is a slide to leave everybody with. We are at the precipice of something truly important. And as I mentioned earlier, every project needs to begin with, every company turning into a multiple billion-dollar company needs to start with a project, incredibly important project that is successful. Now we have the basis and the ingredients for turning what was advanced exploration project into something that could be wildly successful going forward. The downside, we think, is now extremely limited, and the upside potential is unlimited. We have a resource, we can leverage our balance sheet, and again, we're now in the position to grow this into something really big and really important for the gold sector, and we're very proud to be called Maple Gold as a Canadian gold story. So that's what I'll leave everybody with. Thank you, everyone, for spending your time listening to us today. And stay tuned for more exciting news to come out of the Maple Gold world.
Great, thank you.
Thank you, all the best.
Thank you, Fred. Thank you, Tina. Thank you all.